A lot of strange happenings in the market today. There's a lot of some of the stuff that we've been expecting for quite a while now is playing out today. I didn't expect gold prices to go down as much as they did. The most I saw, they were down $80 an ounce or something like that. But I'm going to tell you all about that as well. But a lot of other stuff's going down today too. Just about everything except for natural gas. And this is a big part of what I was talking about for a long time now, is this transition, the big economic pivot. We're going from the biggest bubble in history to all these people who are mistaking a bull market for brains, suddenly not knowing how to get out of this crashing train. A lot of these stocks, especially the Magnificent Seven, were always going to crash like this. And you can blame the tariffs or you blame the COVID pandemic. It's always going to happen. And then something happens, people say, oh, it's because of that. It was going to happen either way. Like, we're going into a recession no matter what. But it's going to get here a lot sooner. And I'll tell you a little bit about what's going on with that too in this video. Plus, there's three things happening, some of them right now, which are completely pivotal, that I'm going to talk about at the end, because not everybody likes to talk about that stuff. But I want to say something about the markets today. When you have a stock and it drops and you check and every other stock in the same industry group is holding up or increasing, then that's a problem with that specific stock that declined. Something's happening. You're missing something. Something's going on in that stock. It's a company-specific risk. Don't take any actions today. There's everything coming down. Cryptocurrencies, precious metals prices, stocks. I'm sure real estate, if you could track it on that quick of a basis. But everything's coming back. Everything's deleveraging a bit, which is what we need to happen, because it's really healthy for the economy to then have a longer run going higher after that point. But first, you have to have a little bit of pain. And this isn't a little bit of pain. It's going to be a lot of pain. And you're seeing it play out today. But I'm going to call back the thing I say all the time about this, about gold prices. Don't worry about it. Even if it goes down $200 an ounce, just don't even worry about it. So maybe tomorrow it goes up $15. The day after that goes up $4. The day after that goes up $20. It'll get back to where it was, and it'll just keep on trucking, going back into the same trend that it is in right now. The most bullish and aggressive trend that gold has ever seen is happening right now. And that'll lead into a lot of stuff of what you can do about all of this, because you can make decisions today that will make a massive difference to you 6 months, a year from now. The choices you make now might actually really play out to how the rest of your life goes. So take it seriously and make the easy decisions being fed to you for free on a YouTube video. You don't know me, I'm just telling you what I believe is going to happen. And I've been getting it pretty right lately, including calling this gold bull run ages ago. But about the uncertainty from all these tariffs that is going to play out a lot and drive us closer to recession. For example, the Stellantis company just announced today that they're going to shut or idle a plant in Canada and Mexico, both. That's an example of a car manufacturer just stopping production. That's the first headline of this type of thing. You're going to hear a lot more about it, because there's a lot of small companies that make widgets. They make little pieces of a car, a bigger manufactured item. And they're not going to be able to keep operating under this uncertainty. They're going to have to scale back, do a hiring freeze, buy out some employees, lower things, and you're going to see unemployment spiking. And it's already begun. They're expecting it to hit 4.5% now. It'll go to 6, it'll go to 8, it'll go to double digits. It'll just take a while. And inflation too. So since it's market-specific risk, don't take action. Don't panic and throw out the baby with the bathwater. Just sit and wait, and if you have any money on the sidelines, you should be a little bit in cash, start looking about where to put it. But don't act yet. Don't act today. Don't act tomorrow. You have to wait until we're either at a point of no more uncertainty or a lot less, or we're at a point of maximum uncertainty. When there's blood in the streets and everyone's panicking, then be greedy. Tremendous opportunities for anybody who had money on the sidelines and has not yet put that money to work. You're getting a discount already when the prices were higher. They've come down a lot today. You're getting a massive discount, a massive undervalued investment with a lot of these high quality gold miners that are Peter Leeds approved. Not all of them, just the ones I like. And they're talking about that oil prices, which dropped about 6% today. It's because of 8 OPEC plus members agreeing to produce more oil. And they say that's why oil prices went down 6%. That's only part of it. A part of it is the same reason that everything else has been affected too. That's going to bleed over onto oil for sure. Copper, I'm certain. And of course, anything that could be affected by a massive incoming recession. So just before we get to the three big military events that are happening today, some of them, I want to tell you about a whole bunch of economic headlines which show you the state of the economy. This is a chart of inflation expectations from the Federal Reserve of St. Louis. And when you have expectations of inflation going higher, you're probably going to act on that, and that'll just drive inflation in real world higher and then cause your inflation expectations to also go even higher than that. And there's a debt downgrade of the U.S. debt, and I've been talking about this for multiple decades, talking about how the debt path is absolutely unsustainable. I'm glad that these professionals getting paid for this are finally coming along and seeing what I told you 2 decades ago about. Fitch downgrades the United States long-term ratings to AA+ from AAA. The ratings agency Moody's joined many other debt watchdogs recently in expressing alarm at the rapidly deteriorating fiscal situation of the U.S. government. It's always been rapidly deteriorating, and they're just noticing it now and saying, wow, it's getting really fast, really bad. It's been getting really fast, really bad for such a long time now, and now we're at the end of the road. We are paying the piper. Everything's coming home to roost. Here's a chart of American GDP, to which I call BS. This is obviously influenced, manipulated, artificial choices to help drive it higher. When you hire a bunch of government workers, even if that's not good for what you need, it still adds to the GDP. You spend money on military, that adds to the GDP. This is completely manipulated and controlled. They printed more money, and you could put a chart on here of monetary creation, and it would absolutely line up with this increase in GDP. And I always tell you that Venezuela had one of the best, strongest stock markets, the biggest rise in gold to the price of about infinity at one point. But here's the delinquency rate. Now, this is from the St. Louis Fed, and notice how quickly the delinquencies rose as soon as the recession began. The recession is the gray area on the chart. Now, we are about to enter a recession now. So you can imagine that the delinquencies are going to do what they have done many times in the past. Now, here's a chart of corporate bankruptcies, and you can see how it just is increasing now. This trend will probably continue just like this, maybe even get a little more extreme. But the point is, a lot of companies, when they go bankrupt, they have either already laid off or are going to lay off their workforce. And that adds to unemployment, which will go into double digits, especially once the recession begins. Here's a screenshot of consumer debt loads climbing to $17.3 trillion, the highest it's ever been. And keep in mind that compared to when the rates were dramatically lower and everyone took on all this debt, the rates now compared to that time are a lot higher now. And those higher rates are being affected on larger balances on people's credit cards and on their debts. So you're paying more interest on a larger debt and you're more indebted, but you're not in a better situation financially from any aspect in that scenario. Which is why more and more Americans are dipping into their savings or paying for things like property taxes on their credit cards than they ever have been before. And this is from the St. Louis Federal Reserve. This is the debt to GDP ratio. And it's almost at, as you can see, it's almost at 130%. And every time a nation's debt to GDP breaks above 130%, that is almost always followed by, pretty soon after that, by a currency crisis, a currency collapse, or rampant inflation, or possibly some combination of the three. Usually within a short window of time after we hit 130% of debt to GDP. Now, I know not everyone likes me to talk about this stuff, but this matters, and it goes into how I'm going to tell you in a second what to do about all of this, because this is part of it. You have to keep an eye on everything, because it all is one thing. It's all connected. It all affects everything else. Troops from Turkey have poured into Syria. It was a matter of time till he moves in. But here's the thing. Turkey has the largest standing army in NATO, other than America, which I guess we're not in NATO anymore. They have a massive standing army. Erdogan is not a friend of Israel. He's taking over influence in Syria. Israel's already bombed locations in Syria previous to this. Maybe they do it again. Maybe they do it on purpose to try and cause a little bit of a row. Here's the thing though. Turkey is a NATO member. So if Israel hits Turkey, does that mean that Denmark and Canada have to invade Israel? I don't know what's going on with all this stuff. And the one thing that my girlfriend Jane told me that I always abide by is that you just say, I'm just glad that I'm not the one who's going to make all these decisions. You can judge all the decisions all you want, but I'm just glad that it's got nothing to do with me. I'm just trying to survive here. I don't have a horse in any of these races. But even more importantly, that'll affect you even more directly, is the potential for a preemptive strike on Iran, both of which Israel and America want to do, more so Israel. That is all set up now with 6 stealth bombers within striking distance of Iran. They have the types of bombs they can drop that are nuclear capable and can bury into the ground to knock out a lot of these bunkers. I've been talking about this for a while. I think it's going to happen. If it doesn't, that's wonderful. I think that it makes sense, and we'll get into it when I tell you what to do, to be prepared in case it does happen. It's unthinkable. Unthinkable things are happening at a pace that we haven't even thought about right now. But China is completely encircling Taiwan right now, doing practice invasion exercises. This is part 1 of 2 from this one military exercise. They're completely constricting and surrounding Taiwan with submarines, boats, airplanes. It's going to be just like this when they decide to attack. You're not going to know if it's a real attack or another trial run. But the chance of Taiwan becoming part of the mainland with China is close to 100%. It's very high. But the question is, and I'm asking honestly, I don't know, do we as Americans back Taiwan? I'm not saying anything, I don't have a horse in the race, I'm just asking you. Put your comments below what you think we should do. And if we back up Taiwan, is it worth going to war with China? No matter how you look at it, this is such a tentative and terrible time in the world right now, which is luckily sometimes where some of the best opportunities come from, and the most important ones because you have to get them so that you don't wind up like everybody else getting blindsided. But this is where I tell you some things you can do about all of this. Everything I've talked about in this video, from the economic headlines and the charts I've showed you to what's going on militarily on a day when all investments are completely deleveraging. And don't take it to be a frightening or panicky thing. Take it to be a necessary step towards deleveraging, towards better future long-term health for the economy. And if you've been listening to me, you're not holding any of these blue chip stocks or any of these high-flying stocks that are all going to be coming down, not only today, but for a while now. And I'll remind you again, as I did in the exclusive I wrote yesterday, I'll remind you again that we were in the crash of 1929 for multiple months before anybody realized, looking back, that the crash had begun. And I keep mentioning this in the write-ups, the publications, on the videos, everything, because I think it's just playing out or setting up very similar to that. Other people will tell you a crash happens, it's straight down. Yeah, if you look at a long-term chart and zoom out, the biggest crashes happen when no one knows it's happened. No one knows it's begun. It's not going to be one day you wake up and the markets are down like today. That happens on the way down a few times, but that's got nothing to do with the crash. Go back to the highest we were at, is in November, I think. And a lot of the stocks that everybody said were only go up, that are just flying to the moon, they don't realize. They're only realizing now that they didn't know what they're talking about at that time. But you have all of human knowledge at your fingertips right now. There's no excuse. You got to make the right choices now, and it's really important. One thing you can do is learn more, keep an eye on this, pay attention to it, take it seriously. That's all easy. There's 3 or 4 things right there you can do right now. One way to keep on this stuff, obviously, is subscribe to this channel. I'll keep you on the right side of this as much as I can. Always giving you my honest opinion. I tell you what I tell my children, my girlfriend, my parents. I tell you the exact same thing. You absolutely are going to want to own some oil production companies, not exploration, but production. In my opinion, this is not personalized financial advice. You absolutely need to be owning some gold. And if you don't already, then you haven't been listening to me for the first 100 videos I did, or 1,000 videos, whatever it's been, then there's no point in talking to you now. But if you're new here, buy some gold. And if you can't afford gold, get a lot of silver, especially a lot of silver. Buy a monster box, 500 silver coins, pure metals, 4/9 pure. At very least do that, or at very least buy a couple of silver coins. I don't mean to say buy 500. I'm saying do that if you can. If you can only afford to buy 2 or 3 silver coins, which you can afford, you don't say, oh, I can't afford that. You say, how can I afford it? I bet there's something in your garage right now you could sell, or something you have in your storage closet you could sell to give you enough money to buy a couple of silver coins. If you have the will, you are going to set yourself up to land on your feet. And don't buy just any oil production company or any gold mining company or any silver mining company. Most of them go out of business. That's a fact. Some companies, you can tell if they're going to go out of business or not just by looking under the hood, looking at their liquidity ratios, looking at their assets to liabilities. You want to get involved with the ones that I talk about in the Peter Leeds newsletter. Or do your own research, which I'd even suggest you do. You got to learn how to do it yourself, and you can learn all about how to do all of this stuff online for free right now, today. So 2 years from now, look back and you say, I did it, and it all started there, or I didn't do it. It's on you now. Make the right choice, and I'll be here to help you out if you want to allow me to do that. And one way to do it is become a Peter Leeds Insider. All the details at peterleeds.com.